Why will oil prices still fall despite the events in the Middle East? What is the target for this decline, and where will I admit I'm wrong if the growth continues? This is an analysis of oil price scenarios. I'm Dmitry Abramakat. I've been trading futures for 15 years, so I know the ropes. So if you want to make money on the derivatives market, turn it up and get comfortable. Now let's dive straight into the charts. To save time, I'll mention I have a detailed video on oil covering future scenarios for the medium and long term. For now, I'll just say we're looking at a triangle pattern that's been developing since 2009. Essentially, to see extremely high prices and a global oil crisis, we just need to finish one last move. That's Wave E. It's marked right here on the chart. Its range is between $82 and $96. As this cycle ends, we'll see a major, significant drop, leading to a new global reality with entirely different oil prices. However, there were many comments on the last video from people who disagree with the triangle, see continued growth, or look at current prices and think I might be wrong. I'm not arguing. My goal here is to show what's forming and point out things you might have missed, specifically the small details I've noticed that I believe are important. Today, we're seeing a decline. We've dropped 3% since the market opened. And basically, our entire growth, the bounce from the last drop in early March, looks like this. There are several indicators here that point to a weak movement, and I want to show them to you. First, if an impulse is forming, a key criterion for me is that the trend line isn't broken. This is also the initial shift line, which is a key factor in showing how the trend is developing. As this trend ends, we get a breakout, an exit from the pitchfork, a trend line breach, and confirmation the cycle's over. If a three-wave pattern forms, it's the same idea, except the breakout happens earlier. What's important with oil? With oil, we initially saw a breakout while the movement was still developing. So we had one breakout, and another one is actually forming right now. This means we're most likely either finishing or have already finished the final upward move in this cycle. To understand how this works historically, I'll show you the same thing now. We had a breakout, came back to test the trend line, and then basically prices collapsed. So in my view, technical analysis and charts are enough for us to see market action in detail, even without fundamental news. What was important here? The entire growth reached a resistance level. That's the upper limit. And once Brent hit 109, the reversal happened. We couldn't consolidate higher. If you look closely, there were 3 attempts here that ended in failure. Consequently, we could start heading down right now and begin developing the next cycle. We'll evaluate the next cycle's development using shift pitchforks as well, where our first stop was at the median line of these pitchforks and the volume zone, meaning the range from 98.5 to 102.5. So what's important here? We are indeed forming an upward movement here. Yes, indeed, one could assume that if the price consolidates here for a while and then breaks out higher, it would call my idea of a further decline into question. But now, I want to draw your attention to WTI. WTI crude oil actually formed a slightly different movement for us, and the growth amplitude during the correction here was completely different. To be more precise, this is the second time we've reached the 62% mark and haven't been able to hold above it yet. In these cases, we also assume that if a reversal occurs, we need to exit our pitchforks and form a trendline breakout. Since our trendline breakout is quite far off, in this case we're focusing on the accumulation. A reverse breakout of the accumulation will be confirmation for us that we're heading to the downside here. So let's slowly move on to the practical part and how I'm thinking so that we can set up a trade later on. Yes, I'm expecting a drop here. Yes, I'm expecting it within the triangle formation, but if something goes wrong, how will I act and what will I look for? Watch closely. If we look at Brent, first of all, we have 2 accumulation zones. We're essentially in a sideways range between them, and a breakout in either direction will show me the next move. To clarify, if it goes down, the zone is a bit further away, meaning we need to hold all the way below 98, and that opens the path to 90. If we hold with a breakout to the upside, then we'll need a breach of 110. And there's only one single obstacle here. That's 115.70. This is essentially the invalidation of our downtrend and consequently a new high, where I'd admit my mistake and realize we need to flip to the upside and go long. If we look at WTI, the situation here is roughly similar. So if we continue to form a sideways range or correction right now, we'll see the continuation quite quickly. First the 109 mark, then 1012, then after that new highs. So we clearly see that acceleration's happening here, but there's no need to wait that long. Meaning if a ready entry pattern forms in the process, a specific technical setup where I can calculate the entry point and the stop loss, then this trade will happen sooner. We'll see the same thing in Brent. So if consolidation happens in the range between the current price, between 105 and $109, then that works for me to look for a long position. But again, I'll repeat, for now, this is just an alternative scenario, which, well, doesn't really interest me yet. So let's get back. I'm waiting for a decline. So let's start with that. If I'm expecting a decline, then there's a confirmation point for this reversal somewhere. To see any major decline, we need to settle below the lower boundary. That's quite a ways off. On the way, two important zones appear in the pitchforks, 100, 320, and 100. If we break through the first zone, or to put it simply, while reaching the first zone or the next one, we see consolidation and a signal is formed within it, I'm ready to consider an entry point. An entry point straight down to 90 as the target for the decline in Brent. If we take WTI as a basis, the situation here is a bit different. Here, a reverse breakout of the pitchforks at 97.5 first sends us to 95. And a trade here won't be interesting because accumulation occurs almost immediately. But accumulation in the 95 area gives us a reason to trade $7 lower, down to 88. Is there a chance of a larger decline? It's very important here to look at the price consolidation we had and the highs we saw earlier. So essentially, the 82 range is the key one we can trade on. So indeed, we could go lower, but it needs to be done in steps once we reach the 90 mark. In other words, first we look for consolidation around, it turns out, 100 to 103 on Brent. Then we move down to the next zone. If another consolidation, another signal, or a breakout occurs here, then in that case, we simply either add to the position or open a new trade. Now, the last thing worth mentioning here is the invalidation levels. And, well, the specific trade, what it might look like with all its parameters. So the invalidation level in this case, if we're talking about Brent, is for me a move outside the pitchforks. There it is, that mark. Meaning above 115, we definitely need to look for a long trade. If we're talking about WTI, it's a move above 109, which is above the 100% size of our initial growth in this correction. These are two criteria that will show me I'm wrong, and I'll need to adjust my markup in favor of further growth. On the downside, if planning a trade, as I said, it could be a pattern. If you're really greedy and don't have time to watch the market, our stop should be at the high because we're allowing the market to correct if necessary. And you can trade on the breakout of those levels I mentioned. 95.70. If we stop at the WTI high, it'll be enough to reach the next zone. The ratio here won't be very interesting, but see how it changes if a local signal appears for the downtrend to continue? The situation with Brent will be a bit different, meaning consolidation at the current price, consolidation around 103, lets us work with small targets from a small pattern. If it's not there, you can work with a stop at the extreme. Consequently, we end up with a pretty decent trade. Actually, that's all you need to know for now. As the markup changes, I'll post all updates in the Telegram channel. I think those who trade will definitely find it interesting. But if you found my video helpful, subscribe, like it, and comment which asset I should analyze next. I'll definitely do that. That's all for me. Bye.